Hello and welcome to your weekly installment of the GoNoGo show here on Thursday, May 16th. My name is Tyler Wood. I am a CMT charter holder, and joining me as always is the illustrious Alex Cole. How's it up in the mountains, my friend?
Fantastic. Yeah, I'm taking a little mountain retreat, doing some hiking up in the Catskills. Love it up here. Rested, good food, ready to go.
I was going to say your beard looks healthier. That's signs of relaxation. That's good.
Got the mountain man look going here.
We closed at all-time highs yesterday on the S&P 500. Alex Cole, let's talk about some trends and what's happening as this bull market takes shape. Starting with our cross-asset heat map, let's just get a sense of the overall context of what we are investing and trading in.
Absolutely. And we've been watching this, of course, for the last couple of weeks, and we saw the equity markets rally from these lows and come out of the no-go, paint that sort of week of uncertainty. We were talking about that for being quite interesting. We saw that string of amber bars, and then, of course, we got the weak go turning into strong go. And now, as you said yesterday, hitting fresh all-time highs. Quite remarkable, really. And we'll talk about that in the context of everything else and what that means as we go through the show. Moving down the second panel, Treasury bond prices finally come out of that no-go and painted a weak aqua go bar. So bond prices in a go trend, and we'll see what that means for rates. Of course, they move inversely to prices, so that could be good for equities as well. We see the commodity index really struggling to make up its mind. We came out of the go trend. We've been painting some amber bars, dipping into no-go colors, and now again, the go fish bars of uncertainty come back. And then the dollar, which had been strong last week, we were talking about how the dollar had regained its strength, is now painting some weaker aqua bars. So perhaps things shaping up for equities, but we'll dive under the hood and look at some of the sector analysis and see what's really going on in a little bit.
Absolutely. And why don't we pull up the full GoNoGo chart for the S&P 500 just to get a sense of what's happening with the GoNoGo oscillator as well. We love the interplay between our trend identifiers and momentum indicators. That helps us give some sense and context to the strength and potential exhaustion of trends. Right now, what we're looking at, Alex, breaking out of that max GoNoGo squeeze, the oscillator finding its way through the zero line, not rejected back into negative territory. That was our leading indicator that there was some strengthening and helpful conditions for the trend to regain its go conditions. We're sitting at a 5, which is an overbought condition. We've come back a little bit from the extreme overbought, but maintaining overbought momentum, as we know from the works of Connie Brown and Andrew Cardwell and others, within a trending market, securities can reach overbought and sustain overbought much longer than we can remain solvent if we start shorting or getting negative and pessimistic on this bull run. Talk to us a little bit about what it means to be at all-time highs in terms of the psychology of market participants.
Well, it means there's nothing above us, right? We've talked about this many times over the course of the show with different securities, but the quote that I like, which probably people have heard too many times, is that, don't let the top of the chart fool you into thinking that that's resistance. And so really, if we pretend that top of the chart's not there, there's nothing above price now. There is no history of people selling at these levels. And what we're looking at is a breakout to new highs and a really enthusiastic feeling. Now, we're going to look inside the market as a whole and see where that leadership's coming from to see if that tempers our enthusiasm a little bit. But the other thing that I wanted to point out here was just how the oscillator held that zero line and then eventually broke out of positive territory. We hadn't seen anything to suggest that this no-go trend wouldn't continue until that oscillator broke out of the max go-no-go squeeze. So that was like you said, our leading indication that something was sort of concerning about this no-go trend. It wasn't really doing what we expect it to if it's going to be a healthy no-go extended trend. And of course, then right away, we saw the amber bars telling us that the market was uncertainty in the direction of the trend. But given that we were breaking out into positive territory, it made sense then that the go trend ensued.
Absolutely. Now let's turn to some of our intermarket concepts. When we look across the asset classes, we're looking at what could be headwinds or tailwinds for trends in risk assets like equities. So let's start with the TNX, the 10-year Treasury yield. A lot of chatter about the CPI print and about commentary from the Fed. Alex, let's just talk about what's happening in price action.
Yeah, really, this is pretty clear. The market has told us that we've entered a no-go trend. So this weakening of the go trend here, the oscillator failing to find support at zero. We talked about that last week and how that was flying in the face of the go trend, really. And then, of course, we've rolled over now the last yesterday and into today, and we're painting no-go bars. So in negative territory, momentum is negative, meaning momentum is in the direction of this current no-go trend. So at the moment, there's pressure to the downside for Treasury rates.
Absolutely. And now one of the things that we like to do with all of our analysis is look at multiple time frames to get a better sense of where we're coming from. So let's bounce this out to a weekly chart. I know investors would love to go back to a zero interest rate policy or a negative interest rate environment and have a whole lot more easy money. Alex, from the weekly perspective, we've just reached neutral territory on the trend model, painting two amber bars. And I'm seeing the GoNoGo oscillator just resting at the zero line.
Yeah.
So from your opinion, is there still a decision left to be made here on that longer time frame?
Yeah, we talked about this, over the course of the last couple of years, how people are probably more okay with stable interest rates. It's the fast rising rates that people are concerned about. And so what we've been talking about when we look at this weekly chart is how we've sort of stayed in this range bound market, and that's allowed equity prices to thrive over the last year or so. And so that's what we're seeing here as we approach these prior highs. The TNX on a weekly basis has sort of turned over, given us these neutral bars, these uncertain bars from a trend perspective, and the oscillator's fallen back to the zero line. So we've sort of moved away from these high prior highs. We haven't made a new higher high. And so if we stay within these levels, this is sort of stable, yes, elevated relative to some time ago, but sort of stable long-term rates, which is okay for most investors. And so we'll see what happens here. If we break below the zero line, then prices may fall a little bit lower. If we find support here, then prices may stabilize, and we'll watch to see what happens going forward.
There are so many great analysts, a lot of them chartered market technicians, CFT charter holders that have looked at historical context. And I think history can be both it's a double-edged sword. It can be a very helpful corollary for us, but we don't want to get trapped in any kind of recency bias. So about the time you and I were being born, interest rates peaked, and they've been in a steady downtrend for over 40 years prior to that pandemic bottom and the rally that we've seen over the last few years. But we don't want to mistake that falling interest rate environment as the only thing that can be a tailwind for a bull market. And so we have seen, and I think a lot of investors have become accustomed to the fact that when interest rates were rising back, mean reverting to that downward sloping trend line, that was typically bad for equities. And when they cooled off, when interest rates fell, that was good. If we look back even further in the historical lens to periods like the 1950s and 60s, we saw equity prices gaining at the same time that we had a rising interest rate environment. So the correlations over time, when we're thinking about this macro picture, they can change. And the context of what was happening in the bull markets of the 1950s and 60s, there was a little more volatility, but we still saw economic growth and advances in the market alongside a rising interest rate environment. So let's not rule anything out and simply pay attention to what's happening in front of us. But I think you made the point very well, Alex, which is stabilization of rates is perhaps the most important thing for the market to get a sense of. So let's move on from the rates conversation. Let's take a look at the US dollar. UUP is the ticker symbol we like to use. It's an ETF proxy for the dollar index. That gives us a sense of volume at which this is trading as well. Alex, you talked about cooling off from that fairly rapidly rising strength in the US dollar. What are we seeing right now from a trend perspective?
Yeah, and last week we were talking about how we'd seen these strengthening go bars and the oscillator had come back to zero. And we were saying that if the oscillator regained that positive territory, that would be a good sign for the go trend in the dollar. A good sign, of course, depends on your perspective. But if we're talking just about the go trend in the dollar, regaining positive territory would most likely allow it to continue to move higher. But we never did capture the positive readings, and we've been turned away by the zero line now for a second time, and we're falling into negative territory at a value of -2, and the GoNoGo trend indicator has started to paint those weaker bars again. So slightly more bearish picture now this week. Of course, we are still in a go trend. If you use the blended trend model that we've got behind the chart here, all the sort of weight of the evidence tells us that we are still in a go trend, but it is weakening. We've lost some of the support from momentum. We're falling into negative territory. So we're getting a bit worried here, and we'd be definitely looking for some support if we are hoping that the go trend continues in the dollar. But in the meantime, definitely taking a little bit of pressure off equities.
Absolutely. And, we love education. Alex and I first met 15 years ago teaching the incoming candidates at Bloomberg a little bit about technical analysis. So the crosshairs that you had there right at our current price levels, can't help but notice the polarity principle is kind of screaming out to us that we are right at a important prior high that could potentially present an area of support. So
Yeah.
Polarity principle tells us that what was resistance, once broken through, turns into support as investors anchor around these key areas. So something to keep in mind, we're approaching what could be an area of support, negative momentum, but still in that weaker condition of the go trend. Alex, let's move on from the US dollar. Let's take a look at our commodities rel map relative to equities in the S&P 500. Let's take a look at a broad array of commodities within the USCI. And we've got panel after panel after panel, which is showing us the ratio chart of those commodities relative to equities. I'm not going to pretend to call off all of these, but it's a mixed bag of agricultural products, energy infrastructure, mining, minerals, both precious and industrial metals. And then, of course, we're seeing some of the lower performing areas like natural gas versus the energy infrastructure. But this is pretty different from what we saw just even a month ago, where all of these commodity sectors were leading. We're seeing greater weakness from some of those agricultural commodities. Correct, Alex?
Yeah, and it's no wonder that on our asset map, we're seeing amber bars for the commodity index, because it's really, like you said, a completely mixed bag here, just about half and half, I would say, perhaps slightly more no-go than go. And as you said, when you look at a heat map, you can see that instead of just that point in time, you can see that we are rotating towards more no-goes. Like you said a couple of weeks ago, the entire top half of this map were in go trend.
Mm-hmm.
And now some of those have fallen into no-go trends. So we certainly seem to be moving towards more no-goes for commodities, but at the moment, enough still hanging on to overall give us that sort of neutral picture on the asset map.
Absolutely. I want to pull up two charts. First one, let's start with copper, CPER, being the ticker symbol for the ETF. Industrial metals obviously have shown great leadership in this cycle. And Alex, talk to us a little bit about that trend continuation, two trend continuation icons there in this go trend.
Yeah, I mean, this is exactly what you want to see if you're long something. Every time we see price cool off, we look for support at the zero line on the oscillator. Early on in the trend, we saw some squeeze build up. So as the market digested the initial gains, we moved sideways. We saw that there was a bit of a tug of war as price really didn't go very far at all in either direction. And then once the market made up its mind and we saw the oscillator break out of the squeeze, volume pick up, we saw that rally in price. We come back, cool off, same thing happens. What's interesting now is that it was a longer period before we got anywhere near the zero line. So we really saw a nice strong move in the middle of this trend. And now we've been more quickly finding support at the zero line as we test it later on in the trend. And we like to talk about this kind of thing as a clustering of go trend continuation icons. And the more often you see that support, the more likely it is then that we're going to continue higher. So after that second one, we made a new high, broke past this prior high here, and we're in strong blue bars. Volume is heavy. We are overbought, so we could potentially see a counter trend correction icon. But as we all know, heavy buying in an uptrend is really typically a good thing.
Typically a good thing, right? We don't want to run for the hills right after we reach an overbought signal. Now, that's a look at an important industrial metal. Let's also take a look at SLV, a silver ETF. We've discussed a lot about the gold prices breaking out of that long-term cup and handle formation. Now, when we're talking about silver, it's kind of the younger brother, higher beta, tends to be slightly more volatile than gold. Talk to us a little bit about what we're seeing on this chart of silver.
Yeah, well, it was really good if you're obviously long silver that we never fell out of the gold colors, right? We saw a significant pullback against this high after the counter trend correction icon. That's the red arrow. We certainly fell quite far, and we saw a string of weaker aqua bars, but it never fell out of the gold colors. So even though we saw the oscillator break back into negative territory, the question then becomes, does it regain positive territory or does it get rejected by the zero line? So I would be hard for me to believe otherwise, that if we'd have been rejected here, this correction would have continued. It would have changed trend. We'd have been looking at a no-go. But regaining positive territory on the first attempt and then retesting and now roaring back above the zero line, that's what allowed the go trend to continue. And like you said, traditional technical analysis, what we love about putting all of the trend model into the colors and leaving everything else off the chart is that you can see important levels jumping off the price panel. And look how immediately we struggle when we get to this prior high, almost to the penny. We hit it yesterday, and now we opened a little low. We're trying again today. So it'll be very important to see if we do make new highs or if we fall away from this resistance level. But definitely go trend in place, momentum positive, and looking good for silver.
And let's just take a look at this on a weekly basis. For those of you who are longer term investors and you're thinking about uncorrelated, cross-asset allocation within your portfolio, this is a pretty important resistance area. And we looked at longer term charts of gold to see these kinds of things playing out. Silver hasn't been a friend to anybody, certainly hasn't gone anywhere in the last several years. For those who are just parking their money in precious metals, that was not a very smart active manager approach. But here we have a clear level that once above presents a real opportunity for those in the metals game. Alex, I love the classical technical analysis. Talk to us a little bit about these important resistance lines.
Yeah, just keeping it in context. And the daily trend that we're saying it's looking strong. And we were talking about, if you look at my cursor, this was the prior high resistance we're talking about. But you can see where this comes from. It comes from way back in 2020 and 2021. So this is going to be a significant and a difficult level for us to get above. But what I also put on there was that we did break out of a downward sloping trend line. You can see, especially here in the latter portion of this pattern, how many times we tested this level. So when we broke through it and retested it, no surprise that we then raced back to the next level that should offer resistance, which of course is coming from these highs back on the chart here. So we'll keep watching. Momentum is positive. We broke out of a max squeeze on the weekly chart as well. We approached the zero line. We've been turned around above zero. So that's a good sign. Didn't even get to the zero line. So there is some resurgent momentum in the direction of the trend on both the weekly and daily charts. So we'll see if we can have another go at this level of resistance.
Very good. Very good. And the last thing from the commodity space, let's just take a look at a GoNoGo chart of US oil. We've discussed a lot about the inflation narrative and about impact on household spending. Right now, on the daily basis, price of oil is in a no-go. Correct, Alex?
Yeah, it sort of scared us a little bit. It had quite a substantial go trend that lasted a couple of months, but then we saw it falter after that go counter trend correction icon here at the highs. And the same thing, when it really pulls back like this, you can see this is quite extended comparative to the other ones of the chart. We turn our eye to that zero line because we know that it should hold as support. When it didn't sort of right in here, now we're a little bit more concerned. And so this rally, being unable to push the oscillator above zero was quite significant. It gets turned away again. And then now we know that the bulls have lost sway, really, or they've lost the power to keep prices moving higher. Amber bar, no-go trend. And now we're finding the alternative scenario where we're finding resistance at the zero line, and we're right back there again. So price jumped today. We'll watch to see if it's enough to get the oscillator above zero.
Absolutely. Now, let's turn our eye back to the equity space. Let's take a look at the S&P 500. But as we know, it is a market of stocks, not a stock market. It's great that the indices are making new highs, not just in the S&P 500, but also in the Dow, also in the Russell 3000, and of course in the NASDAQ. Yesterday's gains being led largely by the technology sector. So, Alex, walk us through this sector rel map, the ratios between each sector and the performance of the S&P 500.
Well, this is where we would advise keeping things in context. Yes, we're at all-time highs. Yes, that feels good, but it certainly isn't a euphoric, frothy market where everything is just doing really, really well. We can see from this chart here that the leadership is fairly thin. So when we take the ratio of each of the sectors to the broader index,
fairly thin and defensive, correct? Consumer staples and utilities being the leadership groups is not characteristic of bull markets.
Absolutely. And just in terms of the fact that there's only two of them at the moment in relative outperforming Go trends, in terms of number of sectors themselves. So if you can see when we were, in the stronger trend, that whole middle of the chart was in Go trends. Now it's just the defensive sectors, the staples and utilities. But like you said, yesterday's moves in technology have certainly changed things in the top panel. So we're seeing amber bars on a relative basis, technology coming perhaps out of the NoGo. And that's been a long time since we last saw some change in technology.
And that amber neutrality is relative to the S&P 500. So when you're looking at relative strength charts or ratio charts, on an absolute basis, market can be going down. They can be outperforming in a downtrend, which means they are just going down less. Now here we are, S&P 500 has made 10 straight higher days, which has only happened 3 times in history. And we're seeing that the XLK, the technology sector, is keeping pace with that. So our next step, as you know from the weekly show, is that we dive down another level, right? So cross asset into the equity space, into the sector groups. And our next step is to look at the industrial groups, the industry groups within each sector, and see where that outperformance, where the leadership and laggardship lie within the sector itself. So let's pull up the industry groups of the XLK, Alex, and a little more diversity. Several groups leading that sector higher, but the one that leaps off the page in the strong Go trend of outperformance is the semiconductors sector. Semiconductors industry group within the technology sector. So certainly larger gains in the tech sector than other areas of the market through yesterday's trading. But let's take a look at the SOX itself on an absolute basis. SOXX is the ticker symbol. To take a look at the semiconductors in an ETF. Brilliant.
Yeah, so this is an interesting one because not yet at prior highs, right? Not yet at those all-time highs that we're seeing on the equity markets, but entering into a new strong Go trend. So, very nice to see. Again, with not too much on the chart, we can quickly see that we're breaking out of this downward sloping movement. We've got a new trend color happening. The oscillator broke out of a max GoNoGo squeeze into positive territory a week or so ago. So things are starting to move. We're now going to have a look at this prior high and see if we can attack that.
Absolutely. And I think that, the importance of the GoNoGo squeeze for us, when you have those periods of tug of war, when buyers and sellers can't quite decide which direction the market is going to move, you can see a lot of trading, but no dominant group. And so breaking out of a volatility compression, out of a squeeze, it's telling us that there's clear, decisive action, price action coming out of that stagnant volatility compression. And if bulls have taken charge for semiconductors, then we're going to see the closing of shorts. We're going to see everybody moving to the same side of the trade, which can deliver higher velocity price moves coming out of a max squeeze.
Yeah, and you can
the exact same way to the downside. Sorry, go ahead, Alex.
No, yeah, absolutely. And you can see how exactly the situation you were talking about, so well described there. You can see how many times that's happened on the chart. That sort of tug of war, that neutral in terms of momentum situation, once broken, usually then the market, as you said, people jump in on that side of the trade, and it happens over and over and over again when when you see these squeezes build and then a movement out of the squeeze, that typically then leads to price movements in those directions. And as you said, it can happen to the downside. And this was such an important one here when price was moving sideways after that prior high. The fact that this squeeze was broken into negative territory, retested another squeeze, and then again, that really told us that this time we may correct a little further than we had prior after these highs. So now that we've gone back to do the same thing, but back into positive territory, you can see how many times on the chart that squeeze has been indicative of a move in that direction.
Absolutely. So now let's go a little deeper. Let's look at a couple of individual names within the semiconductor space, potential trade ideas for those who are looking for those, but also to get a sense on an absolute basis of how these individual companies are doing, and the fact that there's still diversity in technical conditions amongst semiconductors companies. So the first one we're going to pull up, Qualcomm, QCOM, and for anybody who is trading through the late 90s, that Qualcomm might be a dirty word in your portfolio discussions, but let's take a look at what's happening from a price perspective, Alex.
Yeah, Qualcomm is the head of the pack, if you will, and we broke above. You can see here with the cursor, we broke above this support level, resistance level, sorry, from previously in the chart as price moves sideways here, and then we broke above that coming out of the very, very short no-go correction back into a go. And now we've raced to new highs. So really strong go trend for Qualcomm. Momentum is in positive territory and is now at overbought levels. So we may see a cooling of momentum, which would lead to some sort of counter trend correction arrow, which would tell us that perhaps in the short term, price may struggle to go higher, but a definite trend in place, higher highs, strong blue bars, positive momentum.
We're looking for those securities that are trending and outperforming. So we're in the semiconductors industry group within the sector that performed best yesterday and now holding neutral with the S&P 500. Let's move to another one. MU is the ticker symbol for Micron.
Yeah, Micron, very, very nice as well. We're looking at potentially a significant move here if we're able to break above these prior highs. So this one a little different in that we're testing prior highs. We're right at them. We see the GoNoGo trend indicator strengthening to paint a blue bar today as momentum continues to be positive. So this is going to be important. Will we get above these prior highs for Micron?
Absolutely. Strong go trend, oscillators in positive territory at a 5. We've rallied off the zero line. Really simple questions you can ask yourself about any of your security holdings when you're looking at a GoNoGo chart. Let's take a look at the darling of the pack, NVIDIA.
Yeah, so this one, I'm liking this one. We're sort of running up to these prior highs. You can see the string of blue bars here. It's sort of trying to make a run to get to those prior highs. We're right at them now today. We're in positive territory, but we're not overbought on NVIDIA, so perhaps a little bit more room for some enthusiastic buying. But look at how we've broken above the zero line out of this squeeze, coming out of this sort of choppy movement with the amber bars and the no-go bars. So we're now in a strong go trend, testing those prior highs for NVIDIA.
Absolutely. And the last one, let's take a look at AMD.
AMD different, right, Tyler? So this one is going to be an interesting one if you're looking for perhaps a security to play catch up. Like you said, we went to the sector. We know tech started to outperform strongly the last couple of days. Then we went into the tech sector, and we're seeing semiconductors. So if you're sort of wondering, will AMD start to catch up with the relative outperformance of its peers? This may be one where you're sort of getting on it a little bit earlier. So we're still in a no-go trend, but we are seeing weaker pink bars, and we're just now seeing the oscillator break out of a max go-no-go squeeze into positive territory. So should have stayed at or below zero, right, as this no-go trend continues, but it hasn't here. We've broken into positive territory, so that could be significant. And also, I know, sorry to take your time up with these few seconds that it takes, but just jumping off the chart here that we've got a break above this downward sloping trend line as well. So a couple of things to start to get excited about. Yes, the GoNoGo trend indicator saying still weak no-go trend, but a couple of things happening here that would make you at least get ready for a potential move higher for AMD.
And Alex, we love using multiple time frame analysis to understand the broader context on longer time frames. But for sensible entries, we can also dive down in time frames. We don't have to do it here for AMD. Let's talk about what everybody's talking about. Here on the GoNoGo show, we think about more sensible, longer-term investing, following trends, but we can't help ourselves. The roaring kitty's back out of his cage, and everybody has an opinion about this wonderful volatility in meme stocks. So let's bring a GoNoGo perspective to what might feel like irrationality and nonsense. Nobody can overlook the fact that it was up 100% 2 days in a row. But from a GoNoGo perspective, what I find fascinating, Alex, is that the trend conditions preceded anybody's awareness of a return of these meme stocks. And we all read the reports about these firms doing a lot of banking work during the meme craze and servicing their debt, trading debt for equity positions. And we know that this has been fairly short term. But let's just talk about how you might logically, sensibly trade something like this if you were caught up in it. Most importantly, that Go trend took hold last week, not this week. So you would have been positioned. And as we always say, we have no idea what happens on the right side of the chart. But when something is in a Go trend and you have consistent rules, you can handle any kind of volatility that comes your way by simply sticking to simple rules. And so the tenets of trend following are that you want to stay with things that are in trend. So we see that Go condition take hold. Prior to the trend condition, we saw the break above the zero line in the GoNoGo oscillator. We see volume picking up as it's going through those amber neutral bars before we ever hit the Go condition. Now, the price gains followed significantly after that, but certainly preparing yourself for an entry into something that could have an explosive move, it's helpful to remember that the market knows what's going on far better than we do. And by simply listening to the message of the market, you can help yourself out. Now, the flip side of this is how do you manage risk, right? Everybody wants that 250% gain in 48 hours, but how do we exit our positions logically? So Alex, talk a little bit about these counter trend correction arrows and what they mean for investors looking to manage risk.
Yeah, absolutely. So what we know about these counter trend correction icons, this is using momentum in the traditional sense. So when we study momentum, from the textbooks, we talk about buying and selling as mean reversion kind of ideas for momentum. Momentum indicators were created probably in the 70s during times where the markets didn't really take off and trend. We were sort of seeing highs and lows, and those are what they're really, really good for. So whenever we see the momentum oscillator coming back out of overbought into neutral territory, then we're going to see these counter trend correction icons on the chart. So as that really quick move takes hold, we see extended momentum. And then now when this oscillator comes back below the value of 5 on our indicator, so that's right here, it comes back below the value of 5. Now we know that in the short term, it might be a struggle for price to go higher. So that could be a time for you to lighten your position or to make a sensible exit. Now, this first counter trend correction icon we had here was after this smaller run, and you can see that price is moving sort of generally sideways. So it did sort of struggle to go higher quickly, but then of course we know that as we went back into overbought territory, prices took off again. So we definitely want to watch those areas for sensible exits. And now what will be the next step, Tyler, will be we're really fast approaching the zero line. So if we can hold the Go colors and we hold zero, then we'll get a green circle, which could tell us that it's a sensible time to get back in if we wanted to, if we were so inclined to look for a GameStop to go higher again.
And as most people in this meme stock craze trading environment, they're looking at much shorter time frames. So for everybody who's watching this show, GoNoGo charts are created just like any other sensible technical indicator, which means that the construction and the rules are exactly the same across all time frames. So let's take a look at GameStop on a 39-minute bar. That's 10 equal bars in a day. Very, very fascinating to see that Go trend take shape, continuously testing the zero line, finding support, showing us that something was going on long before Roaring Kitty came out, or we saw those massive gains. So from a trend following perspective, the rules here are pretty clear. And
it's
we're
the
back.
same thing, same thing. This is from May 2nd. Go trend in place. We know the oscillator should find support at the zero line, which it predominantly does. And every time we get those green circles, we know that the trend is likely to continue. Of course, this time was the final one, and it didn't, and it broke back below the zero line, and that tells us, okay, now we're a little bit worried about that move, and then we get the no-go. So now on a 39-minute chart, we are in a no-go trend. So this is your quick time frame where you'd be looking to take advantage of the craze that has been going on again over the last couple of days.
Absolutely. Thank you for indulging me, Alex. I know for all of our viewers on this show, when we're thinking about rational and sensible longer-term investing and using the tenets of trend following, we don't immediately think about a trade in meme stocks, but it's helpful to just see how the charts played out. So from all of us here at GoNoGo Charts, appreciate you guys tuning in and checking this out, not only on the GoNoGo Charts YouTube channel, but we're looking forward to seeing you all at the Metastock Traders Conference next Thursday at 11 a.m. Eastern Time. 10 a.m. Eastern Time on Thursday, the 23rd. We'll go in much greater detail into sort of the construction of the charts and some educational tools that you can use on your trading adventure. Until then, take care of each other and trade them well.